as you wish, really as you wish. Right, we're gonna just wait for my mic to start working. Right, welcome. We're going to carry on. We're going to continue. This is the third plenary session today, and this is when we're going to be talking about accelerating the capital markets union towards the European strategic autonomy. Now, I have to say this is an issue that would probably take us hours or even days to discuss when it comes to European strategic autonomy being some of the biggest probably buzz terms of the past couple of years, but now being more important than ever. My name is Sasha VAKULINA. I'm going to be moderating this session. I'm business editor at Euronews. And here with me on stage, it's my great pleasure to introduce you the speakers. We have Marcel HAAG. He is Director General for Horizontal Policies at Directorate General for Financial Stability, Financial Services and Capital Markets Union at the European Commission. We have Jean LEMIERRE, Chairman at BNP Paribas. We have Colin, CEO, HSBC Bank and HSBC Europe. On my left, Vanessa, CEO, Bank of America, Securities Europe, France Country Executive, Bank of America, and Stéphane, BOUJNAH, Chief Executive Officer at Euronext. This session will last just over an hour, and we will be waiting for your comments and your questions by the end of the session. So as you follow us here in the room, you will have the possibility of asking your question a little bit later. And if you're following us on stream online, you do know what to do. You can go on social media, use the hashtag IFF Paris, and we're going to be able to see your comments and to get you all involved in this conversation. Now, without further ado, I want to start with Marcel HAAG and the point of view of the European Commission on such an important issue, and something that has been indeed one of the key issues when it comes to the EU politics, specifically over the recent time. Why capital market union now is more important than ever for the economy, and what are the concrete steps according to the EU Commission action plan that you can now share with us?
Yeah, thank you, and good morning. The Capital Markets Union sounds like a terribly abstract and technical subject, and when certainly some of the steps that have to be taken and are taken under the Capital Markets Union are very technical, but the underlying idea and objective is a very simple one. We want to grow national capital markets into one large, integrated, single European market for capital. And that means that we want to make sure that companies of all sizes and at all stages of their development have access to capital in the European Union, and that investors, and in particular retail investors in the European Union, have access to efficient capital markets to have access to products and services that allow them to make the most of their capital. And we've been working on this since 2015, but ever since the Capital Markets Union has become an even more important objective. Think of the green transition and the European objective of climate neutrality by 2050, which has now become a legal obligation in the European Union. Think of the digital transition that we have committed to. All of this requires enormous investments in the coming years, and we need private capital. We need to mobilize private capital to get there. Also, after Brexit, we seem to be moving toward a multi-hub model of financial markets here in the European Union, where different financial centers compete for financial services and specialize. And of course, that is only possible in a single European market with that is well regulated and has harmonized conditions. And think also of the recent geopolitical recent geopolitical tensions, which call for a stronger role of Europe in the European in the world, and also this obviously requires well-functioning capital markets domestically. Now, as I said, we've been working on this since 2015, and we have taken a number of initiatives in that regard. I will spare you all, to go through all of them.
Actually, could you just give us a sneak peek on some current negotiations and proposals and update us on that?
Absolutely. What we've currently on the table is a package of 5 proposals. The European Single Access Point, the review of the European Long-Term Investment Funds regulation, the Alternative Investment Funds Managers Directive, and a review of the MIFIR, and a review of the post-trading rules as in the context of CSDR. These proposals are all currently being discussed by the co-legislators, the European Parliament and the Member States, and we are making overall very good progress on these. The LTIF proposal we expect to be finalized still before the end of the year. The other 4 proposals may take a little longer, but we expect them to be all concluded relatively soon in the course of next year. And if you ask me what is next in the coming...
Well, you know what, I would like to keep this point about what's coming next for all the speakers for a little bit later, for rather the second round of it, because I just feel, as you said, this is something that has been on at least since 2015 as a work, in progress, but also even before 2015, this has been already one of these issues that has been really high on the agenda and discussed so heavily. So I want to get to know a little bit more about the current one, especially, with the current proposals and the updates since November. The action plan.
Yeah. Well, we're currently, this is currently in the hands of the European Parliament and the Council, who are negotiating these proposals. The Commission is supporting these negotiations, but it is now really for the EU co-legislators to decide.
Okay. Then let me ask you about one of the aspects here that has to play a big role in improving the financing of the EU economy. Specifically, this would be securitization. Could you elaborate on that?
We are currently reviewing the securitization framework. We're working on a report on this. And you have to bear with us that I cannot be too specific.
That's what I'm trying to do here. I know you can't.
I know. I don't want to be too specific, but let me say one thing. We recognize that certain things can be simplified and improved, and we are looking at into ways how to best do this, and also into ways to do this as quickly as possible. And that means that we are not only looking at changes to the level 1 framework, but also at ways to to improve the implementation without making legislative changes to the securitization framework.
Right. Let's go a little bit more into securitization as one of the key aspects. Jean Lemierre, Chairman, BNP Paribas, what's your take on the importance of securitization?
Well, good to see you first. What is good with the Europlus, Paris Europlus conferences, that we stick to the same topics, and over time, I hope we make progress.
Do you think we have already?
Well, in the understanding, which is good.
That's good.
I hope we shall be in the delivery now. What about the understanding? I think we need capital market union for two reasons, which are totally obvious. The first one is after the financial crisis of 2008, higher capital requirements to make the banking industry safer. Fine. And the second one is massive need for investments. But I would like to insist on the fact that Europe is a continent of savings, which is not the case of the United States. We have massive savings, mainly in life insurance, but more broadly, we have savings. It's good to export savings, which, by the way, we do a lot. But as a European, I think we should use European savings for European needs, which is not yet fully the case. And why? It's mainly because, we know why, because we don't have an efficient capital, we don't have a capital market union. We have been talking about this for years, but there are low-hanging fruits. One of them is securitization. We know well what it is. We know how it could work. There have been hundreds of conferences, debates, symposiums, papers. Most of the European institutions agree, and notably the ECB. For good reasons, the ESM, they fully support, and they have written very good papers. And I understand the EU Commission does. Nevertheless, it has still to be unlocked, and we have to do it quickly. Why? Because among various financial operators, banks in the European context are well placed, if not the best placed, to originate and structure operations, notably in green and sustainability and digital. We know the clients, we know how to do it, we know how to work with them, we know how to structure. But by definition, balance sheets of banks cannot reach the sky. Rightly so. So there is a need. We have, it is simple. We need to have the capacity to shift well-structured assets, meeting all the criteria which are good from a green point of view, from a digital point of view, to investors. That would be a fantastic class of assets. And we are still struggling with this question. So I welcome what you said about the proposals on the table. I hope they are ambitious enough. And when I say I hope, I may have a doubt. But it's not probably your will. There are still difficulties. So we need to continue to speak about this, to show what we can do. But it's good, it's urgent. In the meantime, banks will do the job. Of course we do the job. And we put the assets on the balance sheet of the banks, notably the lending. But believe me, it would be safe, good, efficient, if we were able to sell these assets at a decent price, at a normal price, to investors. My hope, because there is a hope behind this, is that what we see in the market today, adjusting interest rates, will help. It's clear that in an environment of negative interest rates and full liquidity, for reasons we know well, I think we have to take this for granted. But step by step, we are exiting, or the ECB tells us that we are exiting this world. That will help a lot securitization. To be honest, we have been in a macroeconomic environment which were probably not highly conducive to this type of financial innovation in Europe. I hope we shall do it. If regulations are well put in place and quickly, that would be a massive support for Europe.
Thank you so much. Colin, CEO, HSBC Bank and HSBC Europe. Let me get to you. There is also a big aspect, and the important one, of the uneven situation in distribution across Europe when it comes to access and opportunity. This is something that you have singled out as an important factor when it comes to capital markets union towards European strategic autonomy.
Yeah, and I think, along with the other speakers, completely agree that principles behind the CMU are almost without argument. Makes a huge amount of sense. And the equity or access to equity capital is clearly, a cornerstone of that initiative. But if you look at equity, I think we do a good job with micro startups, lots of incentives. We do a reasonable job with mid-cap to large caps. But if you think about SMEs in the middle, how do we access and systematically make equity capital available to those SMEs? And if you step back and then say, look, equity or access to equity capital needs to happen along a supply chain. So from those micro startups all the way through, entrepreneurs need to be able to access equity capital potentially under different conditions through that supply chain all the way through to the IPO. And at a headline level, I think Europe's made progress. If you look at private equity with a small p investment, it was 100 billion-ish in 2019. It's 138 billion in 2021. So we're making progress. But if you go below that and look at it market by market, it's very inconsistent. So you see some standout countries, the UK, Denmark, France, they would stand out as leaders. But if you look at the European average, 75% of countries are below the European average for investment of growth capital as a percentage of GDP. So the numbers point at the inconsistency. And then if you sort of peel that back and say, well, why and how do we address that level of inconsistency? I think it's this supply chain access or this ecosystem access to equity capital. And actually what that needs is new firms. It needs people that have capability on the ground, investors who can get to know entrepreneurs, provide them or understand the opportunity. Because if you think about where a company is, particularly in that SME space, it's kind of moving from being a scrappy startup to being sustainably profitable. Now, that's an interesting phase for a bank. Sometimes that's beyond risk appetite because they haven't got sustainable profitability. So from a lending perspective, it's a difficult phase for a bank. And for an entrepreneur, they may not want private equity in the sense that most of us would understand it because of the conditions, the exit terms, et cetera, that would come with that. So what you're looking for is equity investment that is patient, growth-orientated, long-term. And that needs specialist capability. And that's building operational capability in those countries where it doesn't exist. Now, we've got some really good examples, I think, in the UK, in Australia, in Canada, in Ireland, of business growth funds where we've got that capability and it is working very well. In France, we've got the Public Investment Bank, again, that fulfills a similar role. So there's progress in the sense of the overall equity investment is going up, the private equity with a small p. It'll be interesting to see the numbers in 22, given current conditions, but certainly we've seen an increasing trend. I think coming back to the Commission point, I think there's in terms of the environment, I think the environment is also facilitating access to equity. So if you think about risk weighting of equity under the Basel III proposal, I think the European Long-Term Investment Fund proposal also potentially enables investors and hence access to greater levels of equity. So I think there's a lot being done at the Commission level that will help with the environment. So the real need is this operational capacity. We've got examples of how it works, but it is a market-by-market activity. And as I've said, you can see the inconsistency come through the numbers.
Let's talk a little bit about the example of France here. Vanessa HOLTZ, CEO, Bank of America, Securities Europe, France Country Executive, Bank of America. Vanessa, what about your example of developments and trading activities in Paris and Europe when it comes to the example of France?
Yeah, so I think we are a good example indeed. I think Bank of America had a long-term relationship with France. I mean, we had activity since 1953, but obviously Brexit has happened. And we took the necessity as an opportunity here. So we set up, an investment firm in November 2018, and we started to trade, to do our first trade with our European client from that entity, BOUJNAH Security in Europe, in January 2019. So I think the aim was to move efficiently. It was an early decision, it was decisive, and it has bring a lot of opportunities to us. I think the aim was to be much closer to our European clients, increase our market share and our footprint and grow our franchise in Europe. And that has been extremely beneficial because since we obviously moved to Paris, we have now more than 500 employees in our Paris office, and we keep growing. And by all sorts of form, it's not only a French entity by any stretch. We have more than 30 nationalities in our French office. And we want to make sure we attract talent not only from France, but from the UK, from the US, and from Asia. And that's what we've tried to grow here. So I think it's been critical, and the response from our client has been very important and very good since we started here. I think we wanted to gain market share, and we are mainly a sales and trading hub. That means we do all activity from fixed income, which is currency, credit, rates, commodity, as well as all the equity product as well, and some banking activity. But obviously, we're talking about capital market union, and it's very important because the way that we have invested here depends a lot on the regulation, on the tax, on the fragmentation, which is very important, and the efficiency that we can create. While here we have two entities, one broker dealer in Paris and one bank in Dublin. And as you mentioned before, that means there's two capital in two different entities, two balance sheets, and that's an important form of efficiency as well that is taken in place. But I think France has a huge place to run here. So is Europe, because by necessity, we have to be in Europe. That was not the case before Brexit. So now we can only attract, obviously, our EU client franchise, but we should be a lot more international, attracting UK, rest of the world client as well. So we have a big card to play here. So I think has been a good example.
Let me ask you this: if you had the opportunity and the chance to do it all over again, would you still choose Paris for the EU sales and trading hub there?
Absolutely. I think we have a commitment to France, and I think it has a very, very strong beneficial to us. First, the dynamism and the reputation of Paris. Second, I was mentioning the talent pool. The talent pool here is extremely good, especially on everything which is quantitative and research and development. There's very, very strong school in France. And again, we're not only attracting France students, we're attracting students from the rest of the world. So it's very important. And I would like to mention something, is obviously we were kind of the pioneer to come as a US firm in Paris on a massive scale. And the interaction with the regulators has been extremely good. Very sophisticated regulators that where we benefit a lot from their guidance, and it has been extremely helpful. Obviously, the French government as well has been extremely helpful to make sure that all the investors and foreign investors could find a home in Paris and could succeed there. Another thing is obviously the ecosystem, which is extremely diversified, and the talent pool that I was mentioning before, when you can find critical mass. but only for us, which are a sales and trading hub, but for all the control and support function, which is this legal compliance risk. We can find a pool of talent here, and it's been extremely beneficial. But by all means, Paris and France, stay Paris and France. That means the cultural, the life, the balance here, the life, which is extremely high level, has attracted a lot of people. So I think all the infrastructure was in place for it to be a pivotal center for financial services. And we want to make sure that we help create and help, obviously, get involved in that financial census. So I think France had a lot to be able to deliver on that front.
And accelerating the capital market union would have an effect there as well. Stéphane BOUJNAH, Chief Executive Officer at Euronext. Let's stay a little bit with this example of, well, Europe, but specifically France. And let me ask you about the importance of specifically integrating national markets infrastructure.
Sasha, before answering your particular question, let me try to go back to the core of the topic, which is the strategic autonomy in Europe, building the European strategic autonomy, because building European strategic autonomy, and apologies for being that blunt, means improving the competitiveness of European capital markets and reducing our dependency as European to third countries by strengthening our own European capabilities. And the question is, how do we do that? Because Europe has a rich ecosystem in terms of asset managers. Europe is a stronger place with strong European asset managers, with strong asset managers in France, in Germany, in Spain, in other European countries, in the Netherlands. Europe is more autonomous with strong insurance companies in Italy, in Germany, in France. Europe is more strategically autonomous with strong international global banks, or banks with global ambitions in Spain, in France, in Italy, in the Nordic regions. And in order to make that sustainable, we need a level playing field. To a large extent, EU-sponsored regulation over the past 20 years has created a form of unilateral disarmament that has allowed non-EU players to cherry-pick the part of the EU economy they like and which are juicy and profitable, and to let the local incumbents to care about the less profitable part of the financing of the economy. The metabolization of saving into investment is done by all the players I've mentioned, but the contribution of non-EU players has been very selective to this process. And that's the point that we need to address. So I'm urging European leaders to consider a systematic competitiveness test before enacting any EU rule. Basically to pause for a moment and say, oh, we are going to do that and that and that. Who ultimately is going to benefit from those rules? Are they unwanted consequences that we should be aware of before deciding to confirm that we go through that direction? No one here is suggesting to have a closed EU fortress. Competition is extremely good. The question is really the need to assess what are the potential unwanted consequences. In this respect, the recent proposals to amend MIFIR or the MIFIR review are extremely our source of strong concerns. Those concepts about the consolidated tape, those concepts about the market architectures are to a large extent precisely wrong rather than roughly correct, and are benefiting to the ones who are cherry-picking from outside of Europe what is good for them. There is a total misconception of where fragmentation is. Fragmentation of lack of transparency is not in equity market. Fragmentation and lack of transparency is in OTC derivatives, in ETFs, and in fixed income, not in equity markets. So in order to build strategic autonomy, we need a strong mindset to focus on what European wants. And European wants two things. They want simplification. So they want EU rules that make their life simpler. And in this respect, I just want to echo what Jean said about securitization. Securitization was a nice to have in the old good days we had up until a few months ago. In a world where balance sheet is back in our life, balance sheet discipline is back in our life. Securitization is not anymore nice to have, it's a must-have. So I'm totally shocked by the fact that there is a long list of nice things in the Commission proposals, but the elephant in the room, which is securitization, is not there. The same for simplification. We want to finance SMEs, and that we believe that capital market is great. Now, in the US, you have an S1. You have one single prospectus for all US companies, no matter where they are incorporated. Why don't we have a single European prospectus? It's not a similar prospectus, a single form, like a banknote, like your purple passport, a single form, a single European S1. So my point is that we do need a mindset and we need strong institutions. So the Euronext model, because you invited me to do 5 minutes of advertising, so this is time for refreshing or for the ones who don't want to suffer that. What we have tried to do for the past 7 years is to reactivate the initial project of building an integrated, united in diversity market infrastructure. We do operate now 7 market infrastructures, plus 1 CSD in Denmark, but we operate the exchanges of Oslo, of Amsterdam, of Brussels, Paris, Lisbon, Dublin, and Milan, with the federal governance, with the federal supervision, and we focus on SMEs, and we focus on technology. And believe me, all competitors, the Ubers, to use a very popular name those days in France, the Ubers of our industry are welcome, but they focus on niche markets. They don't do SME listing. So I'll come back to what we are doing on the technology world in the second round, but I just want to insist on the fact that building autonomously strategic European players means a commitment to to a certain level of European internalizations. We have brought back our core data center, which used to be in Basildon near London, and we brought it within the EU to Bergamo near Milan. We are internalizing our clearing operations. We used to, and we still are, a happy customer of a UK-based group. We are going to internalize the clearing flows of Euronext clients within Euronext subsidiary. So my point is that a commitment to some form of internalization is absolutely critical to be able to build autonomous groups.
Pick up on that. Follow.
Well, I'll simply make one comment. There is competition across the world. The allocation of savings and capital is an element of competition. I think the key question we have today for Europe is not to endlessly argue about regulations, but to make sure that it is well understood, or the needs of an efficient capital market is well understood on the two sides of the Atlantic. My point of view, I do not ask for any competitive advantage. I simply urge all the European authorities to make sure that there is a level playing field across the Atlantic. Why? Because there is competition about this, and this is fair. Now, the efficiency, it's up to us. We compete, you know, we have clients and they can choose, which is fair. Okay, we compete on many grounds, technology, quality, price, whatever it is. But we have to be mindful that in the world as it is today, and notably if there is a change in the appreciation of risks, which is coming, less liquidity, higher interest rates, tension, we have to make sure that there is an efficient level playing field. That would be my simple remark. I'm not asking for any derogation or any specificities, whatever it is, but to make sure that on market operations, we operate on the same footing.
Colin, would you comment on that?
Well, I think, I mean, very hard to disagree, to be honest. I think you would be hard-pressed to find a bank that wouldn't support simplification of regulation. You know, I think we've spent the last decade putting in place, I think, very sensible prudential regulation that clearly has made the financial system safer and sounder and done what we intended it to do. And the regulation keeps coming. And it's a question, I think, therefore, of where have we got opportunities now we've lived with some of this regulation for a decade, and where have we got opportunities either to simplify or to apply the kind of test, I think, and I think both speakers are really setting out the same test, whether you call it a competitive test or whether you call it an equal playing field between Europe and across the Atlantic. I think it's the same test. And as I said, I think you'd be hard-pressed to find a bank that wouldn't support that as a principle. Now, of course, you get into specifics and there's huge amounts of detail and the devil is always in the detail, but I think that test of unintended consequence as regulation gets deployed is a very, very sound test.
What's your view on that? Of course, if we go into details, as you said, we can go on and on and on, but then at the end of the day, this is why we sometimes argue for so long, because it comes to specific details of that. What's your view on the importance of the level playing field and the simplification?
Well, I think it's been said, it's fragmentation, simplification that brings efficiencies. And there's a lot of inefficiencies here right now that we're trying to work for. And I think what is very important about the fragmentation is to make sure that first, you know, on the national front, because what we're talking about is that some discrepancies, some different requirements, some different rules between local market and European markets, and to make sure that maybe we have a bottom-up approach where we make sure that at the local market we put the necessary reform in place and we raise the level at the local standards, and then afterwards, obviously, from this bottom-up approach, then it becomes a lot easier to have a consolidated approach on the European Union. So I think that's going to be a key thing. But you know, put reforms first at the local area to be at the level of the standard requirement for Europe, and then we have something to play here. But I think Europe has really a choice now, and they have all the cards to be able to compete with the US, compete with Asia on a lot of markets. And again, what is key here is not compete on a European client, but compete on all clients, UK, rest of the world client, I think, which is critical here. So I think that's going to be the approach we need to take from that front. And simplification. I look at the market that you've been mentioning. When you look at the counterparty clearinghouse, I mean, it's extremely complex compared to the US. Extremely complex. The number of players, the number of ramification is so large that we need simplification on that, because it makes Europe difficult for external, for international to be and to invest in Europe compared to their local markets. That's what we need to attract. That's what we need to simplify here.
Well, in order to do so, let's now go into a little bit of our looking into the future. And I would like each speaker to, you've touched upon some of those, I know already, but I really want to go a little bit in a more structured way when it comes to, I want you to single out some few, well, let's say top 3 near-term priorities when it comes to accelerating the capital markets union, so that then we could get better with European strategic autonomy. Again, I do understand fully that top 3 is a hard thing to list now, because this is much more than 3, not even dozens, but hundreds of important priorities there. But let's try to single out just a few. If you can do 4, that's all right. I'm fine for 4, but not a lot. Marcel HAAG.
Okay, I will make use of the flexibility that you give me, and I will mention 4. Look, I think we all agree on the principles. I think the discussion has shown that. The test lies really in the individual measures and what we are actually doing. Now, let me mention 4 things that the Commission wants to address in the coming months. First of all, there is a harmonization, a targeted harmonization of national insolvency rules. Insolvency procedures have been identified across the board, and as long as we have been pursuing the Capital Markets Union as one of the major obstacles. But it is also a tough nut to crack because the resistance is particularly strong when it comes to touching upon insolvency procedures. But we think the time is ripe to start going there. The second area I'd like to mention is listing, in particular SME listing. We want to facilitate the listing of securities in Europe across the board, but in particular for SMEs. And in that context, we want to address the prospectus requirements, and we will also like to make sure that the market abuse rules are proportionate and make it easier for, in particular, SMEs to comply with them. Then we want to address, and that's my third point, open finance. The exchange and use of data by financial institutions. We think that there is a large innovation potential that lies in open finance. So we want to facilitate data sharing, but obviously this all has to be conditional upon the consent of the data subjects concerned, the respect of the data protection rules, and also maintaining clear security safeguards. And my last point is we will probably in the early days of next year present a retail investment strategy where we would like to look into how capital markets could be more easily accessible for retail investors. We want to look at how we can make sure that retail investors can have bias-free advice, and how they can get access to a wide range of cost-efficient products and services that are value for money.
That's four.
And
You have the fifth.
Stop here.
Okay.
No, well, you gave me four.
No, I didn't want to
the
do that. I didn't want
opportunity.
to go that strict, but if you wanted to add one more, that's all right. Jean Lemierre, Chairman, BNP Paribas. What would be your top, 3, 4, let it be. I sound very strict here, I know, but I have to just take care of the timing as well. What would be your top priorities?
Well, if you allow me, I shall raise a question of a different nature. We have done a lot in the path to a single market, because this is what we speak about. We have a common currency. After 2008, we have built up strong institutions. The SSM in the remit of the ECB, the Stability Resolution Board, which has been able to collect massive resources, maybe too big, but nevertheless, they are there. And we need to make sure, and we have, of course, the ECB. All of this has been done by the Council, the Commission. And we need to make sure that public opinions, political leaders have trust in what they have done. And part of the difficulty we may see in some discussions, not always, but in some discussions, is sometimes a difficulty to trust. Now, Europe is not unique. When I look at the current decisions in the US, I see that there is a debate between the federal level and the state level. Well, you know, not in monetary policy and not in banking, but in other sectors. So this is a question which is rather common in large entities, large blocks or continents. So to go back to your precise question, is that at a time monetary policy changes, at a time there will be less liquidity, quantitative easing is becoming to be over, that we continue to keep the sense of the single market and the common good. And I think the ECB, the reaction of the ECB is very important when they said, look, fragmentation, no way. They didn't say how they do it, but they were very clear up front, telling we shall act. And that's very important. I think this is the most important point today, is that people in Europe continue to share the same view, that there is more value continuing building together than retrenching case by case, pieces by pieces. And this is a big challenge. And I know this is the challenge of the Commission now. It's not going to be easy. We see it everywhere in the world. At the end of COVID, with a new tension on inflation, probably too many people have the reaction, which is to say, smaller is better, fully home is better, which is, we know it is not true. We shouldn't forget the legacy of what we have done. This is true across the Atlantic. I think it's true for the two sides of the Atlantic.
But that's also the trick when it comes to the notion of strategic autonomy, isn't it?
Sure, sure. But this is an old debate. We shouldn't be frightened by the debate. We should know it does exist, and we have to confront, and we have to do the best with this debate. And I can see it in Europe, but once more, I see it in the US for different reasons. You know what I have in mind when I say this. But we are in a situation in which people may think that a local decision is better than a more global, federal or federal-like decision. And this is a big challenge. And in Europe, what we speak about is the single market, and the single market is good.
Colin.
Thanks. There's so much to pick up on actually in those comments. I will resist slightly. I think the strategic autonomy point is fascinating because, I think what we're talking about is trying to find a balance between the understandable push for strategic autonomy, but in the world's most interconnected economy. And that is a difficult balance to pull off. And I think the unification point is really important because that drives you actually to an integrated approach within Europe to keep the connectivity, but have the independent capability that you need to be able to demonstrate that strategic autonomy. That is a very difficult balance to get right. I think might partly be why there are so many detailed conversations around some of the challenges in doing that. In terms of priorities, I'm going to give you 2.5.
Okay.
So 2, but 1 I think leads to a third. The first one, I'm going to go back, and it's within the context actually of what we think is coming from a macroeconomic perspective, which is this operational capability in member states to be able to deliver equity capital to SMEs. And the reason I go back to that is because growth needs to continue. We've got to really drive the engine of growth. And that is built around the SMEs who are the future IPOs and the great companies of tomorrow. And we can't take our eye off that ball, despite all the other discussions that are going on. And that is detailed, painstaking, national level government work, but within the context, I think, of everything the Commission is doing. So I'd still have that as number 1. The second one, it reminds me a little bit. I was asked 5 years ago, what would be the most important thing for a CEO by 2030? And I gave a really unglamorous answer, which was understand your data. and I still stick with it 5 years later. And the single access point piece that was put forward in 2021, I think is so important. And I just wanted to get my numbers right, but we have 150,000 reporting entities in Europe. We have 200 plus public reporting obligations on each of those entities. And we have over 35 legal frameworks that we have to comply with within Europe. So, if you're an organization that's got multiple presence around countries, that is a huge load. And I think the reason, therefore, I think the single access point is so important is that if we can gather that information together for investors, the simple process of having to pull that together triggers a whole series of other conversations around this topic of simplification. So that's my half. So I sort of, the single access point is number 2, but I think it leads into and will force very clearly the simplification conversation.
Vanessa, you want to comment on that?
No, simply one quick remark,
Yeah.
listening to what you have said. I agree on what you say. But we are in a situation in which the momentum must create value for the people, for them to accept that the common good is better than the local good, to make it simple. What are the 2 key challenges people see today? Unfortunately for us here, it's not the capital market union. What they see is energy and defense. And if Europe, and on the 2 points, I think Europe is on the move, is able to show to people next winter that a common approach on energy policy is better than isolated approaches, or that a common approach on defense policy with a massive German move to this, that will change the vision people have. And that will become easier. I think Brexit shows us exactly what should not be done, which is fragmentation. Energy, defense, show us what we should do. And if we are able to create the move, which is on the table today, then I hope is that capital market union will look as more obvious.
But you see, apart from this, the common points where everybody agrees upon the important issues there are still some detailed, different and specific aspects and the factors. And of course, and as you said, this is not the first time, not the first year we are talking about the Capital Markets Union. And yet every time we say, yes, indeed, now the importance of it is more important than ever. And yet every time the situation also changes and the factors change and becomes even more important than ever. So it's also about, as you said, the macroeconomic point on that one. Vanessa HOLTZ, what's your priorities?
Well, I think a lot has been said already, and I kind of agree on that. I will more talk about opportunity.
Right.
Yeah. And I think the opportunity is what we all focus, and the leadership and the Europe leadership, as I say, on ESG. There is a huge card to play here because we're far way ahead, in terms of the region compared to other regions. And because the importance of ESG is critical to investors, to companies across the world, I think Europe has a huge card to play here in terms of opportunity. So I think it would be the best way to leverage and to channel international investment in Europe because of our ESG leadership. We're going to deliver taxonomy in 2024. There's a lot of things that has been done. So I think everyone is looking at Europe to be a leader in that sense and to attract, international investors. So I think for me, it's an opportunity. Obviously, there is what you mentioned before is the single access data, and which is going to be critical. Simplification, lack of, reduced fragmentation, it's going to be key. But ESG is where I believe we have a huge card to play for Europe, and I think we can't miss that chance. So I think making sure that we deliver on that is going to be the path to attract, foreign investor, and we need diversification. Everyone needs to be diversified in their risk, diversified in their investments, and making sure that Europe attracts everything from the US, from the Asia, is going to be critical in that, and ESG should be the center of that.
Thank you. Stéphane BOUJNAH.
Well, clearly, I'm talking for a position where we have already achieved a significant way towards strategic autonomy by trading 25% of the equities traded in Europe are now traded on Euronext platforms. The aggregate market capitalizations of companies listed in our markets is around 6.5 trillion euro, which is twice the aggregate market capitalizations of companies listed on the London Stock Exchange and 3 times the aggregate market capitalizations of companies listed in Frankfurt. So something is in the making to create the critical mass, and that's why we have launched a program called Tech Leaders to identify more than 100 technology companies in Europe, irrespective of the place where they are listed, but to make the rest of the world through visibility programs, through a dedicated index, to identify European technology companies by making Europe the relevant framework for technology companies. Now, if you ask me the 4 or 5 priorities, I would say, as I said earlier on, a proper S1, a proper single European IPO form. Not a similar IPO process or prospectus, the same one, which means an agreement on the language to make sure that there is an agreement as to what is in English and what is in another European language, except for the Republic of Ireland, where they are the same, and what is the table of contents so that everyone, when you look at the listed company in Europe, can go to the same section of a single database. That's very important. That looks very practical and bureaucratic, but it can be a game changer because Europeans love Europe when it brings simplicity. They hate Europe when it brings complexity. So we love Schengen, we love the euro currency, we love the customs union. We don't like reporting obligations. The second point, as I mentioned it, is securitization. No need to elaborate, I covered it earlier on. The third point is a set of measures to facilitate consolidation. There is no strategic autonomy with Playmobil companies and playing in Legoland and Playmobil games. You need strong players to compete with global players. So we need to have a vision of what should we do to facilitate consolidation. Above and beyond the surface of things, which is antitrust, there are plenty of existing rules that disincentivize consolidation, which is needed in various segments of the finance sector. So a sort of industrial policy of the capital markets, which is minded in the same way as the semiconductor approach of Europe, where there is a policy to build a strategic autonomy in semiconductors, is needed. Otherwise, we will be a continent of happy clients being milked by the rest of the world. The final point is to focus on the competitiveness test, basically to have the discipline to say, as it is the case for antitrust. I think the antitrust policy is great. Mrs. Vestager is not favoring European champions or European customers. She organizes a transparent debate, and at the end of the debate, she says, okay, you know what? I believe that the divide between making champions happy or customers happy is there. But at least the debate is transparent. What we have in finance, in the finance world, in capital markets, is that we have a river of rules, and 5 years later we say, oops, the market share of European players has massively collapsed, or this sector has disappeared, or there is no more equity research, or retails are not there as much as they used to do, or SMEs are not listing anymore. Guess what? Mind the step and think ahead, not through the impact analysis, which is a very sophisticated bureaucratic process, but through a fundamental competitiveness test, what's going to happen. And finally, I want to echo what Jean said. I think at the end of the day, this commitment to support the European common good rather than the local good is all about tangible examples. He mentioned a few of them. I think there is a big one that we tend to forget, is that all of us in this room, we have been vaccinated a few times thanks to a uniquely coordinated purchasing process handled by the European Union. Every single vaccine the inhabitants of Europe got was empowered, enabled by a bureaucratic process handled by the European Union. And that was created in a matter of months. So, I mean, just pay tribute to the fact that most of us are vaccinated and for many of us alive because the European Union worked well. So I think it's other countries have handled very well outside the EU their vaccination process, but Europe did it at a scale and maintaining export of vaccines in addition to vaccinating the European inhabitants in a way that is unparalleled in the planet.
Thank you so much. We're going to now take a few questions from the audience. If you would, we have a hand here. Could you please get the microphone right here in the center? Yeah, middle. Would you just introduce yourself also so that we, yeah.
Hi.
Hi.
Hello. Good morning. I can ask 2 questions. Yes? You say yes. My name is Duturat, surname Felix. I work in Orange. First question. What is the role in outperforming European equities markets over the long term by taking advantage of European stock momentum? Second question. Is there an inverse correlation between the dollars and commodities? The evolution, how do bonds move in relation to assets and other classes?
Oh, wow! These are two questions. Right? Who wants to pick up on either of questions here? Stéphane? Well, I can't answer that. You know, that's not my my role here to say. Would you want to pick up on the longer? No. Well, you see, you really puzzled us with your questions, I have to say. Thank you so much. I wish I had them earlier. Next time I'm going to make sure that I speak with the audience a little bit in advance to make sure that I have them, you know, and press them on answering that. I hope we're going to be able to answer that in the next session as well. Please keep that up. I'm going to come talk to you as well, because this is excellent, really. Sorry, can we have more? Yeah.
I have a question, Arnaud Bresson, CEO of Paris Europlace. Mr. HAAG, you mentioned the question of Solvency II and the reopening of Solvency II. Can you tell us where we are today in terms of results of this reopening to increase the potential of equity markets in Europe, because it is a crucial issue? And for Jean Lemierre, same issue. You were talking about the way to orientate the European savings towards the European economy. We have Solvency II issues. We have the LTIF. What is the big priority on that subject? How can we try to succeed to get the instruments that the households on one side or the institutional investor on the other side need to accompany the financing corporate, including SMEs and IPOs, which interest Stéphane BOUJNAH?
Well, on Solvency II, as you know, the Commission has made its proposal, and the French presidency. The member states have started under the French presidency to look at and discuss our proposal, and the European Parliament has started its work with the rapporteur Markus Ferber from the EPP in a lead role. Both the Parliament and the Council still have to finalize their positions, and once that's been done, the Commission will work with the Parliament and the Council to finalize the proposal. And for the time being, the Commission sticks to its initial proposal and waits for the Parliament and the Council to give their views, so that we can have an informed conversation. So that's, I'm afraid, what I can say at this point.
Two remarks. One, which is probably much before the question Arnaud Bresson raised. In emergency, the EU has been able to put a massive program, which is Next Generation EU, with massive, and I mean massive. We speak about hundreds of, we speak about billions of euro. And for the first time, it has been done on the basis of a funding around the EU Commission. And the EU Commission has become, it doesn't happen too much, has become one of the first sovereign issuer in the world. It has been done, I wouldn't say overnight, but at the European time, it was overnight. Yep. And this is unique for various reasons. One is, for the first time, a program was funded by the borrowing of the Commission, which is solidarity. And we have been talking about this for long. And we thought that many governments could oppose. They didn't. And what do they do with the money? They fund programs which are going to prepare the future, which is exactly what Arnaud Bresson has in mind, which is how to use the capacity, the savings and the capacity of funding of Europe in a straightforward way, solidarity, to fund growth for the future. It's done. It's being done, to be honest. And it is massive. And I must say that this is, in my view, underestimated, especially when we take into account the views about the level of debt of some countries, sovereign debt of some countries. And we shall see over time the power of what has been unlocked. I shan't raise a question for our friends for the Commission. Are you going to repeat this in the future? We shall see. We shall see. But it's an extraordinary important story, which is part of the answer. The other part of the answer is how to unlock the savings, not through the intermediation of the Commission or a member state, but in a straightforward, direct way. And I think it has a lot to do with the capacity of the Europeans to accept a level of risk. We cannot put together full safety and creation of value, jobs, capacity for the future. We need to be able to accept some level of risk. And this is what we speak about when we speak about securitization, capital market union, Solvency II. We speak about the capacity to accept some risk. And we are going to see over the next month, notably because monetary policy is changing, that this capacity of taking risk will be at the core of the funding of the new activities in the future. But it's a highly political question, politicized question.
Yeah, but it's a great one. I want to actually pick up on this. We still have a few minutes left, so I'm going to pick up on this issue of it will depend a lot on the European capacity of accepting and taking some risk. And this is something that I would like to, in a bigger notion, this is something that I would like to now to throw to all the speakers. Stéphane, what's your take on that? How important is that for the future, given the examples, of course, as already mentioned here?
Well, first of all, the reality across Europe is much more diverse than what we can think of. We are a bit biased here in France with the focus on the importance of life insurance schemes that are heavily subsidized by taxpayers and that have a risk profile which is pretty peculiar and unique. In the rest of Europe, where people have to save for for their pension, the risk profile is pretty different. If you consider, for example, a country I know a little bit, which is the Netherlands, and the importance of managing a more continuous risk profile of their savings to provide both yield and growth. You have different situations. You have countries like Spain where retail invests directly in shares, as we used to do in France 50 years ago. You have countries like Italy, where you have a combination of people investing at the retail level in govies, which is relatively safe from their point of view, but also in equities through all sorts of things. So the situation is much more diverse, and the risk appetite is extremely culturally driven. I mean, you have in the Netherlands a very intense participation of retail in derivative products. The most vibrant part of the option market in the Netherlands is retail. People go home and trade options. So I think the situation is more, what is really more fundamental is how we bring both retail and institutional investors in Europe to equity financing of growth projects. And the surface of things, the most visible one is the tech sector, because tech is the ultimate risk. I mean, no visibility on cash flows, high risk of relevance. So the only way to finance those projects is through equity. I think the initiative we have launched, Tech Leaders, is extremely important, because what has been the main weakness of the tech sectors in Europe is that we have great technology companies across Europe that are fragmented and that are not identified as belonging to one single sector. You have, let me give you a good example. We have, just for the sake of the argument, a great payment company, electronic payment company in France called Worldline. You have a great payment company in Italy, in the UK called Nexi, and a great payment company in the Netherlands called Adyen. They are all looked at, except by very specialized investors, as a Dutch company and a French company, whereas they belong to the same fundamental European sector. So what we are trying to do is to create over the years the perception of a cloud tech sectors where other people will forget where those companies are incorporated and listed, and will look at them through an index that we are going to market. We'll look at the European technology sectors. And that's extremely fundamental. That being said, Jean is right, but to go back to more boring and more unpleasant conversations, if you want an equity market, you need three things. You need issuers, you need specialized investors, and you need equity research. In Europe, we have no more shortage of issuers. In the old good days when we were young and slim, there were all those discussions about people don't want to create companies, blah, blah, blah. This is over. We have waves of tech companies of very good quality. Now, you need specialized investors, and you need research. Specialized investors is an issue, because too many institutional investors in Europe had such a great time just by going to the office and buying govies and then going to the spa without having to do the hard work of cherry-picking very complicated companies. So developing this specialized desk for technology companies or for SMEs is complicated. And that the ball is in the camp of institutional managers. And the other part is equity research, because without equity research, investors are blind. And in this respect, the sort of, it's a chemically pure example of unwanted consequences. MiFID II went religious about the business model of equity research. So equity research disappeared. So as Mao Zedong said, when the fat gets slim, the slim die. So the large corporates lost a lot of equity research. The ones who were covered by 2 or 3 equity research lost all their research. And they have changed the model, and they have amended the rules, but the damage is still there. So these are, in my view, the 2 pillars where a lot of efforts is needed.
Interesting. Colin, but what are your thoughts on that? I know this is such a grand, right, conversation, I know it, but it has so much factors in and also such an overview on being, of thinking ahead and some of the priorities that you have already listed, of course.
No, it does, and you're right. It's a huge topic. I think I would pull it all the way back. This is a capacity question. So really what we're debating is how do we increase investment capacity to provide more access to people who need it for equity? And therefore, it's a combination of everything that's been said. There's the institutional side. And if you think of the firepower that's available to pension funds, and obviously Solvency II is key in unlocking that, the European long-term investment funds, the proposals on the table, the detail of how they work and how the 70% will work. But you certainly see an opportunity there. But I think as you move through the big institutional to the retail investor, that's where the structural challenge is. And the last report I read said that retail private individuals in Europe have 32% of their savings in cash or short-term deposits versus 10% in the US. So it gives you a sense of capacity that could be unlocked in Europe with the right incentives. I think the challenge from a risk perspective, though, is behavioral, and some of the cultural points have been made. We've seen individuals tend to keep themselves within their national borders when they're investing. So how do we encourage the cross-border? And we're back to the integrated market debate again. But also we have to put all the protections in place in terms of the sale process, suitability, etc. And obviously we can't take any shortcuts with that.
Yeah,
so I think it's a combination of all the measures to increase capacity.
And finally, Vanessa, your final thoughts on that?
I think Europe has shown that they can act very quickly in a state of emergency. You mentioned COVID. We have obviously the Ukraine and the Russia crisis now, and the price of energy. I think I think Europe should know that it's an emergency now to act on all these reforms. And I think we have a huge card to play, but this is a state of emergency, I would say.
Yeah, absolutely. Thank you so much. Thanks so much to all the speakers. Thank you for everybody being here in the audience and everybody following this online. Thank you. Thank you very much. And we are moving on. And right after the third plenary session, it is my great honor to invite here on stage for the keynote address the governor of Banque de France. Please, the floor is yours.